morning, all. Ira Epstein with your morning flash update. And this update is for Friday, and we're at the 28th of July, 2023, just around 8:15 a.m. Central Time. Take a look. The stock market back up. So yesterday was the wobble day. Everybody trying to figure out what it means with what happened with the European Central Bank. Bunch of economic data that came out. Is it positive? Is it negative? Dollar today down, giving back a fraction of the gains that it made. More important today is what's going on in the yen. Look at this wild range, 73 to 70.64, 2.5 cent range almost in the market, and down 50 points. I'll get into that in a minute here. Grain markets down, a lot of rain. First day I've woken up in Chicago in a while to thunderstorms and a lot of rain. It's moving out. We will be without the heat index, 96 in Chicago today. With the heat index, they're saying 105. In a city this size, that is stifling. So indoors is where you belong. Tomorrow, back to 80 degrees. So this is just a front moving through. Bonds and notes stable, but the important thing is they added a lot of yield to them yesterday, which flies in the face of those that have been buying the 10 to the 30 years, saying, that's it, we're going to see yields falling. Now, as we take a look at some of these numbers, June personal income, up 0.3, not as high as expected. Month-over-month consumption spending, up 0.5. They were looking for that. The PCE index, month-over-month, double what they thought. When you come to the price index, however, year over year, it was down 0.8. The core PCE, which is one of the Fed's favorite numbers, up 0.2. Prior was up 0.3. They expected it right there, no big change. And year over year, up 4.1%. The prior was up 4.6. So this is a 0.5 point decline. That's what's friendly. The market's looking at this in the stock market going, the Fed's getting things going their direction. Another thing the Fed looks at, and it said it in the meeting on Wednesday, was the cost of wages and so on. So quarter over quarter, the employment cost up 1%. They expected up 1.1, easing back a little bit. This is why the stock market's up. The employment cost year over year up 4.5%. The prior had been up 4.8. That all moves in the right direction. Same with the wages quarter over quarter and the benefits down a little bit too. Everything here firing in the way that the Fed wants. At 9 this morning, we get the University of Michigan consumer sentiment and then the Bank of Japan. So they held their short-term interest rate right where it was. But the Nikkei newspaper yesterday was talking all kinds that they were going to change some of the caps on yields, and it's exactly what the bank did. They said they're going to have greater flexibility. They're going to treat the upper and lower bounds of the range as reference points, not as limits any longer. And they're going to start buying 10-year bonds at a 1% rate every day through the rate operations, effectively raising the cap by double because it had been 0.5. So now you've got to ask yourself, what does that mean? Some traders will see this as the beginning of a rise in the yen. The market isn't saying that. It's dropping back. Others will say it'll affect the carry trade because it is so popular to go in and do things in the yen because they have a real negative interest rate. So you want to borrow there, you want to take that money, apply it elsewhere, and that's been going on. So you got all these gyrations, and at the end of the day, the market tells you what's going on, and it is not, at least at 8:20 a.m. now, that favorable, this market. So that's one of the ways that at least I am looking at what's going on. For those of you that are students of embedded readings in the Bollinger Band, take a look at your grains. You've been losing them, so this is the pullback you're getting. You haven't lost them in the energy complex, and I'd be surprised if the market doesn't get some good bids on a further break. Now, what I want you to do is really carefully consider this. You know, in the mornings, I start you off at 5:15. I'm typically recording Monday through Thursday. Actually, it's Monday through Friday, my morning updates. Then on the weekends, I do videos for you. This is for subscribers. And I review the weekly charts because we're doing a lot of trades that are based on weekly, and you're in those trades much longer. They're not in and out type trades in any manner. We'll talk the daily fundamentals. We'll talk the daily and weekly charts often. We'll talk about chart patterns, what they're doing, swing lines, Bollinger Bands, moving averages, slow stochastics, putting them together on weekly and daily charts, trying to give you a plan. You get 22 days of that. which equates to, on average, 22 to 24 videos, all for the cost $7.95 introductory and no contract. You can quit whenever you want. It's basically a cup of coffee at Starbucks, one of the large ones, right, with your tip. And you get all that. Give it a try. Go to iraepstein.com. You can move your cursor to the top here, give it a click. It'll take you right to the area, explain everything you need. And you can always call my staff and they'll work with you. I'm Ira Epstein. You have yourself a great day. I will talk to you all at the, let's say, the weekend updates this time. They'll either come out tonight or tomorrow when I cover a lot of the weekly charts. You have a great trading day.